Americans know the price of everything and the value of nothing. Price versus value. How to know what is a valuable asset. Is the price good? Is the price bad? How to know if you're getting good value. One of my biggest mentors, Mike Maloney, has a couple unbelievable videos on this. This is one right here. Price means nothing. Value is everything. And he calls them wealth cycles. And as you'll see here in a second, most assets, they're uncorrelated. They go in this valuation channel. It looks like an infinity sign here, a figure eight. As you see, you're going through these channels. If you can, the old adage of buy low, sell high, most people understand that intellectually. They get it. But emotionally is where most of it falls apart for people. And we tend to gravitate to what the herd is doing. Everyone is running out of the burning building, and that's what we do as well. If you can moor yourself in the principles, in the foundational coolness, the calm, collected coolness of understanding that we need to be running into that burning building and buying up assets when there's a fire sale instead of running from the burning building. When gold, silver, Bitcoin, whatever asset class is through the floor, when it's 2009, 10, 11, 12, and real estate is through the floor, those are the times you want to be purchasing real estate. Or purchasing assets when things are on fire. As Warren Buffett says, we want to be greedy when others are fearful, and we want to be fearful when others are greedy. In a time like this when there's asset prices going through the roof. So how do we know what's valuable even when prices are up or prices are down? How do we know if things are good value or not? And again, these wealth cycles really show you what is valuable and what's not. And again, this is from our blog today that we wrote about this. And I would suggest you go watch this video. It's a 15-minute video. And it's a phenomenon wealth cycles are coined by Mike Maloney. And in his book, The Guide to Investing in Gold and Silver, which is another phenomenal book. And even if you're not into gold and silver, you don't like gold and silver, please go watch that video and please go read that book because it'll tell you a lot about investing, macro trends, and cycles that you need to know as an investor. So in that book, he gives one of the best examples. He gives an example of a family who started with a small house and sold it for gold and turned it into tens of millions of dollars at the end of their lives, all because they continually invested at the bottom of a market cycle in one asset class and rode that asset up in value here, and then let that class bottom out real estate, and they rode it up here, and then they would continually jump in and jump out to the tops, down to the bottoms, and then ride that up. So again, they would take their real estate, they'd sell out, ride this up, sell out into the next class, and then ride that red wave up, as you can see there. So, which gives you this, when you're catching the peaks of all of these channels, it gives you that ability to jump out of here, down to here, and then so now you're here, and then you ride that up, and you're selling out here, and jumping down to there, and then you're riding that up. So that gives you that really, really exponential gain, a parabolic curve. And all this, again, because they continually use this repeated cycle over and over and over again of buying low and selling high. They continued multiple times throughout the course of their life. And sometimes this can last a generation or two. And it might not it's not going to be a 10 to 20 year thing. It's probably going to be a 40, 60, 80 year process. And again, by comparing and dividing the price of one asset against another, it can give you and gave this family a roadmap to generational wealth. And again, we have one of our prior posts here yesterday of where of how to value those assets as well. So that's a really important thing here as well. I'll go back here really quick, and when to buy and sell assets. So this is a really, really important one to see, again, how are we going to how and when to buy assets. This is a really important, and this is kind of the segue, the part two of that. So I did this video about 4 years ago on this, so I'd love you to check this out. It's a little longer, 30-minute video. See how I did compared to Mike's video and give me your thoughts on that. I'm not near the professional he is, but I would love your thoughts to see how I did on that. So please check that out. And again, just by paying attention to simple, broad macro trends gave them an easily distinguishable course to invest in, as anyone can do. And here's really some of the important stuff. You need not be a financial guru or genius to get ahead. However, you are required to pay attention and not outsource your thinking and investing to managers, money managers, fund managers, etc., who are looking over your wealth and have never made a dollar, most of them, and investing in their lives. And as Robert Kiyosaki would say, their brokers are broker than me and you, and they just suck fees from you, sucking your life being out of you. Who Stole My Pension by Robert Kiyosaki and Ted Siddell is all about the farce that is America's pensions and 401ks, the incredible waste and corruption that have bankrupted the system and have put the country and people's futures on tilt. So much so the government had to come in and stop pensions decades ago, the defined benefit, DB, so companies could compete globally, or so they say, and offload the retirement onto the employees, and transitioned, ERISA in the 70s to the DC, the defined contribution system, and 401ks, et cetera, and left them gambling in the markets and taking all the risk, while the fund managers sat there and pushed one button a year, switched, a different fund and clicked their assets somewhere else, and they just soak up the fees, a couple percent every single year, while taking zero risk. And this is some really startling data. Got this from Personal Capital. The 55 to 60-year-old, the 55 to 65-year-old plus, so really 55 and up demo, has around $80,000 median, and only 250, 230, 250 on average. That's including higher net worth individuals saved in their 401k for retirement. This is catastrophic and means higher taxes and inflation coming our way to pay our way out of this through currency printing. So these people are going to get what they put in general, especially the pensions. So they're going to print currency, like we already saw in the last year or two, bailing out different union funds, pension funds. We saw it with teachers unions, I believe it was in Chicago and Illinois, don't quote me, but we already saw that in the last year or two, bailing out these statewide funds. And it's going to just increase the pressure, supply of currency going out there trying to chase fewer and fewer goods that are being made. We're seeing, again, I don't know how many different things we need to look at and see. And just me personally, the more I see it, just almost become desensitized to the store shelves being empty and the lack of supply everywhere, the cost of everything going up. That's just going to continue. I don't see a way out of that unless someone can give me an answer that I'm just completely missing. I mean, we have to think about this and run these thought experiments of where is life going? What are we doing here? And how are we going to get out of this? These mistakes don't have to continue. They can be changed. We are God's highest form of creation. We are human beings. We can do anything we want. We can get out of this. Many are set up to fail because they have failed to plan. And as Jim Rohn, one of my favorite personal development people of all time, says, if you rely on government for your retirement, you can divide by 5 at the end of your life. And if you invest yourself, you can multiply by 5. No one cares about your retirement, your well-being, your wealth more than you will. Do not rely on the elites, on the globalists, on the progressive politicians, and they all are. And progressive is a stolen word from 100 years ago. They are not progressive. They are regressive. And that's what these people are. We should really be calling them regressives. And they are stealing from the future, printing currency, printing so they can have prosperity now, and stealing votes, and stealing your wealth, and stealing the prosperity of the future. That's central banking. It's a core tenet of the Communist Manifesto, which we just did a post and a video on that recently as well on our blog and on the YouTube channel here. It takes diligence and discipline, but anyone can do it. It's up to us, and it's our responsibility to do this as human beings, as good citizens, as good family members. And by using this simple price to value formula, you can put yourself in the driver's seat for your wealth building and retirement with confidence. Stay strong. And again, please remember, I'm not a financial advisor. I don't have any financial licenses. It's just my investing journey for the last 10 to 20 years, studying monetary and history and political history, and putting these things together in my experience of investing and the fruits of my labors and what I've seen and what's worked and what hasn't. So I appreciate you guys more than anything, your time, your attention, energy spending with us. Please let me know what you like, you don't like the video, dislike the video. Please subscribe if you like this content and want more of it. Or again, we're going to be doing a lot more of how to get out of the system. What we see coming and the things that we feel inside, the intuition, the just the aching and the willpower, the perception, the intuition, God's higher faculties that He gives us. We're the only animals that have that, and we have that ability to seek out and say, my gosh, I know things are wrong and I need to change something. That's what we'll be studying here and writing about and coming together about. So I appreciate you guys a ton. We will be adding, we did our monthly portfolio update. We're going to be doing that. It'll eventually be probably $50 to $100 a year, just kind of like a mastermind, a Voxer channel to ask me questions that you have and that just takes more time to put that portfolio together. So it'll probably be a small monthly fee, or a yearly $50 to $100 to just get that write up once a month on our blog. Other than that, we'll still be doing the free, just daily write ups about what we see and what's going on. So I appreciate you guys more than anything, and the time and attention and energy is truly something I cherish, because it's the most important asset we have. And we'll see you on the next video.